We're joined live by Shadow Assistant Treasurer. Thank you, Stephen Jones. Thank you for your time, Stephen.
Great to be with you.
Now, a big banking inquiry been announced today. There's a bit of scepticism, in particular from the banks. We're getting the sense that they're not too happy about this because the pressure's on to be passing on interest rate cuts, but they've got to worry about deposit holders as well.
Look, there's no doubt in a low interest rate environment that the pressure is on the banks and all deposit holders ensuring that they can pay a decent rate of return to the savers as well as the borrowers. But I guess my concern about Josh Frydenberg's announcement this morning is it comes too late. 12 months ago, in fact in June last year, they received a report from the Productivity Commission looking at competition within the banking and finance industry. They have been sitting on it for 12 months. The problems are clear, and yet the government is doing nothing, spooked into action because Labor's putting a bit of pressure on them. It's really a case of too little, too late.
The government's argument is there were plenty of rate cuts that weren't passed on while Labor was in government as well, and that's the prerogative of the banks. They're private companies, and so why should the banks be justifying to anyone why they're not passing on interest rate cuts but their own customers?
Look, our banks, and particularly our big banks, enjoy an enormous privilege. In fact, if you look at competition in the market and look at the big advantage the big banks have over their smaller competitors, one of the advantages they have is that implicit guarantee, too big to fail, which enables the big banks to lend on national and international markets at a lower rate than their competitors. There's a number of other regulatory advantages that the big banks hold as well. But here's one thing, and it was highlighted in the Productivity Commission report, that helps to level competition within the banking and the lending sector, and that is the role of mortgage brokers. 66% of all home mortgages are now being written by a mortgage broker. They have the capacity to be a real honest broker within the system. One of the things that the Productivity Commission and then the Royal Commission recommended doing is ensuring that there is more independence from the mortgage brokers to ensure that they genuinely are acting in the best interest of consumers. Legislate a best interest duty and ensure that mortgage brokers are acting in the best interest of the people who pay their wages. Now,
so if we break that down though, legislative best interest duties, we've seen time and time again, they're basically the wet fisher regulation. What do? It's a slap on the wrist with the best interests, trying to enforce it. And then you look at those practical measures, they've not been implemented. Things like putting the broker's fee back onto the customer because it makes them less competitive. Banks can wear that cost, smaller mortgage brokers can't.
Look, there's a couple of things that need to be done here. And if you go, again, sorry to be harping back, but 12 months ago the government received a report on competition. They've done nothing with it. A couple of things. Let's beef up the role of mortgage brokers, ensure that they're acting in the best interest of customers, ensuring that they are clearly disclosing where, for example, they're a mortgage broker that is owned by a bank, and a number of them are. Let's ensure that there is more transparency in that area. But there are other roles that the Productivity Commission has recommended that the government jump into as well. One of the reasons that customers don't move from one bank to another, it's difficult. A lot of their personal details are tied up, but also the rates that are being provided by banks are very opaque. It's very difficult for a customer to compare one to the other.
I know they've done studies where once you have more than 3 products with a bank, which can it be mortgage, debit card, something else, you're done. Yeah, you know, no one moves.
They're
because
the fiscal
it's just physically impossible to, or very hard, I should say, to kind of compare actually what you're getting out of it.
That's right.
But at the end of the day, we're again putting this back onto the customers. Isn't this the right thing for the government to do? To say to the banks, look, you've got your logic, you've got your reasoning, put it out there. We've got the ANZ banks saying that they think there's misinformation out there now and that this should be up to the public, that there is this open discussion. So what's wrong with that?
Well, I think the government has a role. I don't think the government can just say, look, we've had a Royal Commission, job done. We've won an election, job done. They actually have a role. They can implement the recommendations of both the Royal Commission, only 6 so far. Out of 76 recommendations, only 6 have the government implemented so far, and we're nearly Christmas. Importantly, they haven't implemented the recommendation on mortgage brokers, which is critical in this area.
But they've said it will reduce competition, which is actually a worse outcome for consumers.
Actually, on this, they won't. Actually, on this, implementing the recommendations on the mortgage brokers will improve competition by legislating a best interest duty, ensuring that mortgage brokers, who write 66% of the mortgage business, are absolutely operating in the best interest of the customer. Here's what will happen.
This was the solution Labor put forward, though, for financial advisors. You said, we've legislated a best interest duty. Yay, FOFO, look how great. And then it's the worst misconduct we've seen out of the Banking Royal Commission.
No, actually, the misconduct would have been a lot worse. And in fact, a lot of the misconduct that we saw out of the Banking Royal Commission was actually a breach of the law, not legal.
And if it's not being enforced, which it wasn't under Labor as much
strong
as Liberals.
regulators, but can I get back to the important role of legislating a best interest duty for mortgage brokers? That way, they have the information, they're experts within the mortgage market. If they see that one of their customers can be getting a better rate at a competitor bank, they have a duty, they have an obligation to be ringing up that customer and saying, you know what, I can get you a better deal over here. I know I've just put you into this one, but I can get you a better deal over here.
And I'll get a fee for it, so what do you do? Yeah.
Well, if the customer is doing better off overall, then they're facilitating competition within the market. A role for the government, a role for the banks, a role for the intermediaries. It's simply not good enough for the government to be sitting on its hands and saying, job done.
So this summit that was proposed by the CEO of ANZ, he wants the banks and the RBA and the government to sit down together to talk about what they're going to do if we have more rate cuts. We've predicted about 3 more. We're getting very close to 0. The government said it's inappropriate to have the banks sitting down with the RBA and the government, that there needs to be that delineation. Do you agree?
Look, the government's wrong. In a low interest rate environment, the Reserve Bank Board or the governor, the board through the governor, signalling that we could go into unconventional monetary policy. The reason that they're going to have to do this is because the government will not implement a fiscal strategy, a fiscal stimulus strategy. Absolutely necessary. We do need to get all the levers working together. Absolutely makes a lot of sense for the government to be sitting down together with business, with the community sector, with the regulators, to say, how can we get all arms of economic policy working together? Because at the moment, I think my colleague Andrew Lee used the analogy this morning with you, it's a bit like a person swimming with one arm. Yeah, you can do it, but you won't get there nearly as fast as if you've got 2 arms working, and we don't. We need monetary policy and fiscal policy working together.
When it comes to the bank's response, though, there is that very cynical perception that they are just trying to make more money, that this modelling does show that they've made $500 million out of not passing on these interest rate cuts. But at the end of the day, they're there for their shareholders, they're there for the mums and dads who have deposits. So what's wrong with them making that money?
Look, banks have got an obligation to pass on a return to their shareholders, but they've also got an obligation to their customers. Let's be frank about it. They've also got an obligation to the people who loyally do business with them, who transact business, put their savings with them, take out a mortgage or a business loan with them. They have an obligation to them to provide the best deal possible. And I think we need more competition within the market to ensure that there's a nudge, if you like, to the banks to do the right thing. And I've seen some of the comments from the banks this morning, and frankly, they are confusing marketing and advertising with competition. Putting out a glossy brochure saying that the ANZ is better than NAB or Commonwealth is better than Westpac, that's not competition, that's marketing.
Isn't that exactly what
lowering your rates? Lowering your rates, providing
but that's the
a
information
better
you use
product.
to get a better deal from another bank. That's competition.
Look, if the information is just obfuscating the fact that we're all offering the same rates and the same services, that's not competition. That's tricky advertising. Competition is driving prices down.
The flip side is failure.
So
banks would fail. This is the issue.
An important point. Yes, it is important that we have stability, but there has been a lot of analysis of the 4 pillars policy. A lot of the analysis, learned analysis, the Productivity Commission and others, and said, well, yes, it's important. Moving through the global financial crisis, I think the pendulum has swung a long way towards financial system stability, but we also need competition, and they can actually be working together. That's why the ACCC has a role. I think all the findings have showed that the APRA does a great role. APRA does a great role in establishing stability within the banking sector, but there has to be a role for competition as well, and that's why the ACCC needs to be given a mandate.